All right, guys, welcome back to the Four Horsemen of Real Estate podcast. I'm your host, Neil D'Souza, and today we are talking about something that could change the way you think about money and real estate. We're going to get into the best and worst investments in Nova Scotia for 2025 in the world of investing. It's not just about making money, it's about understanding the difference between assets and that which puts money into your pocket and liabilities that take it out. And with the new Liberal government spending, the stakes have just gotten higher, but so did the opportunities. So we are going to cover the sectors of real estate that are staging to break out in Nova Scotia, Canada. All right, let's start with the assets, the investments that can put money in your pocket. We want to put money into your pocket every single month. So first up, the most promising investments that we have in Nova Scotia right now, multifamily real estate, residential properties. These are apartment buildings, duplexes, and triplexes that offer multiple streams of income under one roof. Now, for smart investors, you know that in a world where people will always need a place to live, multifamily is a money machine. I believe Warren Buffett talks about it like uh, ATMs. And with the new government spending pushing for more housing, demand will only grow because we know that building will actually take time to get up, to ramp up and actually get there. In the meantime, we continue to be at a deficit of rental units. The next up, we've got vacation rentals. In Nova Scotia, there is a huge demand for vacation rentals, short-term rentals, because Nova Scotia coastlines, they're a magnet for tourists. You can turn a charming cottage into a cash flowing asset by listing it on platforms like Airbnb. And here's the kicker. Again, the government is spending on tourism and infrastructure, and this will only make these areas more attractive if you're looking to invest into this area. I know it seems like things are challenging. We got tariff wars and all of that. Vacation rentals, the demand out in Nova Scotia is still very high. Affordable housing developments. I know everyone's like, uh, is affordable housing really the area? Well, why? Because affordable doesn't necessarily mean low profit. Let me say that again. Affordable housing does not necessarily mean low profit. It actually means high demand, consistent tenants, and government support. Again, the Liberal government is throwing money at affordable housing. They are making this one of the, I don't want to say safest, but safest bets in 2025. They are continuing to pour money into these areas through social services, and they are looking for people to provide this type of housing. Least attractive investments in real estate in Nova Scotia right now. This does not mean that you cannot make money in these areas. Let me be clear. We know that you can make money in just about any area of real estate right now. Some are more profitable than others. These are a little less attractive right now in Nova Scotia. As we would say, all that glitters is not gold. And so maybe this is an investment that you want to avoid right now. First of all, luxury waterfront homes. People have loved the idea of buying luxury waterfront homes. They look glamorous, but they're not much of an investment these days. Uh, for the most part, they're a whole load of expenses. So high property taxes, maintenance costs, um, and quite frankly, it's a tiny pool of buyers. It means your money is locked up in these. So if you're looking to buy a luxury waterfront home, realize that down the road, real estate is by and large going to outperform just about everything else because it's going to be consistently going up, unless, of course, the government puts some sorts of limits on it. But in the short term, if you're thinking about making money, buying yourself a waterfront home may not be the best use of your funds, unless, of course, you decide to go back to the vacation rentals or short term rentals and you rent that waterfront luxury home because in Nova Scotia, there is a high number of US residents that like to come to Nova Scotia and vacation there. They have an affinity with Nova Scotia. There's a lot of history between Nova Scotia and the US. As a result, there are a lot of Americans that actually like to come up to Nova Scotia and rent. And so, in that case, that would be a different situation. But if you're buying it for yourself, not a great ROI right now. Second, commercial office spaces. Most of us love commercial real estate, but the world has changed. The world has changed. Remote work, really, it's here to stay. The internet has changed retail forever. We have a lot more empty storefronts. And quite frankly, it's a bit of a liability. But we know that even with government spending, the focus is on housing. It's not on office space, and they're actually looking to convert over a lot of commercial office space to residential. They want to repurpose them, and so that might be an opportunity. But commercial office space for the sake of renting out offices, definitely a downward trend that will continue through 2025. All right, third, underutilized retail space. If your property isn't earning money, it's burning money. Let me say that again. If your property isn't earning money, it's burning money. The internet has changed this area, as we talked about, just as it's changed the office space market. And so, as a result, even with government incentives, we're not seeing a change in consumer habits. And so we don't see, or we're not predicting a change in consumer habits as it pertains to retail stores. And finally, on the list of maybe not so attractive, we have high end condominiums, overpriced, low demand, and too much competition. It's like buying a fancy car if you that you can't afford and you can't show off. That's what's happening in high-end condominiums. Quite frankly, the condominium market is taking a beating across the country. Normally, we don't talk about Canadian real estate, but the condo market has taken a beating right across the market. And and the fundamentals for condos has always been that it will not increase at the same rate that a detached home will, or even a semi-detached for that matter. But right now, high-end condos and condos, quite frankly, in general, are taking bit of a kicking. Now, if you're able to sit on your money, there might be some opportunity there in the future because there is still more than enough housing demand. People just can't afford the cost of them right now. But perhaps as interest rates continue to go down, we'll start to see that demand come back into the market. All right. So, what's the smart move? That's what we want to get into. What's the smart move? Investing in income generating assets, the properties that pay you every month, even while you sleep. You want to focus on high demand residential properties in growing areas like Halifax and Dartmouth. Again, the Liberal government's spending push, they're pushing money into housing, into infrastructure, into tourism, and all of which are inflationary. It's like it's like inflationary jet fuel and for the right investments. Hard assets are the sponge that soak up excess liquidity in the economic system. The more they print, the higher it goes, the higher rents go, and they will continue to go higher. And asset prices will continue to go up. Thank you, Mr. Prime Minister. All right, let's talk about a little bit of the Halifax housing market as of March 2025. Um, Halifax, with a population of over 500,000, is the largest city in Atlantic Canada and the 13th largest population center in Canada. Halifax average home prices rose 6.5% annually to over $600,000. This price has more than doubled over the past decade. Meanwhile, Halifax median home prices rose 8.9% annually. and 17% over 2 years to 574 plus thousand. Okay, so here's some interesting stuff right now. There's some market challenges in the Halifax area and opportunities. The population growth in Halifax is actually increasing 4 to 5% annually, and that's really driving demand. Now, the housing projects. Uh, these projects are, we're talking about 242 new public housing units are expected by the year 2028, another 3 years from now. But supply still is lagging behind demand in the Halifax area. Homelessness numbers have nearly doubled since 2022, with over 1,100 individuals as of January 2025. These are obviously concerns that are plaguing the Halifax area, but they also create the opportunity that you and I get to go in and capitalize on. As always, guys, just keep growing, get educated, acquire more assets. Thanks for tuning in to the Four Horsemen of Real Estate podcast. I'm your host, Neil D'Souza. If you found this episode valuable, share it on your network, leave a review, and stay tuned for more insights as we'll be going across the country talking about province by province on how to build wealth through real estate. And remember, your job is to build assets, not collect liabilities. And if you're not riding that horse, you'll find yourself trampled under it.